Now it's time for our ETF segment, and our next guest manages the First Trust New Constructs Core Earnings Leaders ETF. It has beat the S&P 500 over the last 12 months. So to find out more, joining us now is David Traynor, CEO of New Constructs. It's good to have you join us. Thanks so much.
Thanks for having me.
Let's start with that Core Earnings Leaders Index. Tell us why you think it's been beating the market for so long.
I think it's because it's based on real diligence on earnings. You know, it used to be back when I started in the business, people really cared about earnings, and people still care about earnings today. But what they miss is that as corporate filings have become 200, 2,000 pages, there's all kinds of critical details buried in footnotes. And the Core Earnings Leaders Index outperforms because we have a better measure of earnings. We've done the diligence in the footnotes, and this product chooses stocks that have the biggest advantage in terms of core earnings edge, core earnings minus reported earnings. And that is, I guess, proven to beat the market pretty substantially in the last several months.
Looking at the top holdings in that ETF, like we've got Meta, IBM, NVIDIA, do you think that might change heading into this year?
I think it will. I mean, these guys have been super profitable companies, but AI is changing not just asset allocation, and the way people pick stocks, but I think it's changing the economics of a lot of these big businesses where the spending, and we wrote a nice report on this about the AI winners and losers, the spending is so big that it's even putting companies, Oracle, Meta, and Amazon on their heels because they actually don't have the cash flows that like an Apple and an Alphabet do to sustain the race. And so, yeah, I think the earnings profile of a lot of these companies is going to change a lot.
We were speaking earlier with another guest about, spending and AI when it comes to some of these big companies and how there's been a lot of spending and maybe not seeing results that investors maybe want to see. I'm wondering, what are your overall thoughts on investing in big tech right now?
I think you got to be careful. And I think that's part of the reason why the Core Earnings Leaders ETF has done so well is that you can't just blindly throw money at an index and assume that diversification is going to solve your analytical problems. You can't just blindly throw money at popular stocks anymore. You got to do the diligence. I mean, what's wrong with diligence, right? Maybe it's going to come back into favor when you see performance like what we saw up 27% versus 18%. So I think people got to break out their calculators and their notebooks and their pencils and their models, read footnotes, find out what the truth is, make sure you're investing based on companies that are the most profitable and avoiding those that are least profitable, and especially avoiding companies that are overstating their profits because they're bearing all these charges where you can't see them in footnotes. So I think the big thing is diligence, and know what you're buying, know what you're selling, do the diligence. And I think the Core Earnings Leaders ETF proves that if you do that, you'll outperform.
AI valuations, they have become more scrutinized by Wall Street recently. Do you agree with that?
Absolutely. I think we're running into the law of large numbers, right? I mean, these valuations got so big, and we know we're running into the law of large numbers with respect to our national debt, our spending, right? There's no longer this sort of this idea that there's an infinite amount of money out there, whether it becomes the government or I think for investors. What that means is now people are becoming, on the margin, more discerning. More discerning is super helpful to those of us who want to be analytically rigorous in how we invest. Because as long as people are at least somewhat discerning, then the market's going to send capital to the companies that produce the most earnings. That concept still works. Earnings still matter. The key is to make sure you're paying attention to the right earnings, because there's two sets of numbers out there. There's what Wall Street and companies want you to believe, and then there's core earnings. And if you can get to core earnings, you have an advantage.
It's interesting, going back to your holdings, General Motors is among the top of them. Given the uncertainty right now within the auto industry, we're talking about all those layoffs happening at General Motors today, why GM?
GM makes so much more money than Tesla. The cash flow is outrageous. The capital return, the amount of stock they're buying back, is outrageous. GM is a perfect story of being maligned by the media. People get so excited about ESG or electric vehicles or all these things, and it's not that those things are bad. ESG and electric vehicles are good, but not to the extent that the valuations implied for certain stocks. Meanwhile, all GM is doing is generating billions of dollars in free cash flow, great earnings every year. Mary Barra, great CEO. The executive compensation there is tied to return on invested capital. They've got awesome distribution. They've got the ability to make all kinds of cars, affordable cars, electric vehicles, trucks, expensive cars. It's an extremely well-run business. It just gets a bad shake because the media doesn't like it as much as it likes the electric vehicle companies, and it's just been overlooked. And this has been a core focus list holding for us for a while. We're glad to see the market become more discerning. I think it's a poster child for, hey, at the end of the day, I don't have unlimited amounts of money to throw around. Where should I place my bets? And GM is a great place to place a bet right now, with respect to economics and fundamentals and competitive positioning.
What about your thoughts on investing in financials? Like I see JP Morgan, another top holding.
Another huge free cash flow maker, another great core earnings generator, super profitable business, well diversified, still cheap. Yeah, I mean, financials aren't going away. This is one of the biggest and best players, one of the best risk managed firms in a long time. Jamie Dimon, CEO, one of the most respected business leaders across all sectors. What's not to like? I mean, maybe it's not sexy, maybe it's not in high flying NVIDIA AI stock, but it's I don't like to invest based on sexy. I like to invest based on core earnings and cash flow, because I think that's what wins over time, and I think the market's proving that to be a good sound strategy.
Okay, we will have to leave it there. We're out of time, but appreciate you joining us today. Thanks so much.
Thank you.
That was David Traynor, CEO of New Constructs.